First of all, let's start off. Netflix is a very strong credit. So Netflix has a significant market cap. It's $425 billion or so. The company has growing revenue, growing EBITDA, growing free cash flow. Its net leverage ratio is very modest, talking 0.4 turns of leverage. The company generates a ton of free cash flow. So Netflix is a very strong credit. It's rated A3A, so they have the ability to borrow. So within that $50 billion that they have as acquisition debt, there's been reported that's $25 billion will likely be bonds, and the remainder will probably be a combination of term loans and maybe some other borrowing. And while $25 billion sounds like a lot, if we think about Netflix bonds in the market right now, they're relatively scarce, right? So if Netflix is part of communications, you think about borrowers like AT&T, Verizon, Comcast, T-Mobile. Those companies have huge debt loads and are large parts of the investment-grade corporate bond index. So Netflix is relatively small, so I think that there could be a lot of interest in Netflix bonds. So I don't think it's a problem at all.
And then the news of the day here, Paramount coming back over the top with a hostile bid for Warner Brothers Discovery. They're talking about $54 billion of debt commitments from Bank of America, Citi, and Apollo. So again, your market is going to have a lot to say about how this deal gets done, isn't it?
Yeah, and this is a completely different story, right?
Yep.
So Paramount Skydance is on the edge of investment grade. So they're investment grade by by Moody's and Fitch, high yield by S&P. If you add, they're talking about the combined company could have about $100 billion of debt. Nice. So if we look at the debt loads at both Paramount, Skydance, and Warner Brothers, you're talking about an incremental $50 billion. Yes, they have a $54 billion commitment. You're talking about pro forma net leverage of over 5 times, and that's including synergies, right? So that's going to be much tougher. You're talking probably a good chunk of that will be high yield. And that is a lot for the high yield market. Now, the high yield market is very strong. Issuance is up. Yields are down. I think, the high yield market is very favorable, but this would probably be the biggest name in high yield. The biggest name in high yield right now is Charter. Yep. So Charter unsecured bonds are the biggest name. There's about $25 billion market value for Charter bonds in the Bloomberg High Yield Index. Depending on how they set it up, but this could easily become, the biggest name or close to it. So that makes it much tougher. Now we have to see all the details, but
so if I'm a shareholder, Warner Brothers Discovery, the regulatory aspect, which Jen Reed just walked us through. Yep. But now I've got to sit there. If I'm an equity shareholder, do I want to be sitting there with a balance sheet of 5 times leverage?
If you're a Warner Brothers shareholder, you're getting cash, right? So cash. You could argue that you don't care. But if you're a Paramount shareholder, yes, you have to be concerned that the pro forma company will have a significant amount of leverage. And that is a big name in high yield.
Wow.
But they also have big backers behind them, right? Between the Ellison family and Redbird Capital.
Paramount Skydance stock is up 5% today.
Yeah, but this is not going to end anytime soon. This is going to drag on. So, Stephen, media companies being heavily indebted, what do we know about the appeal of this sector to investors? I mean, I think about Warner Brothers Discovery when it came into being. It took on a lot of debt. David Zaslav spent years trying to pare that down.
Yeah, and he was unsuccessful, right? The company was junked, and they ended up doing a massive tender offer where they put in a lot of secured debt ahead of the existing bonds and then used that to tender for existing bonds at a discount to par. So bondholders really got hurt then. And then the company, was junked. So it's been tough. It's, when you think about communications in general, people feel a lot more comfort lending to more traditional communications companies like telecom, cable. You have hard assets. It's a little bit easier to lend to. It is a little bit tougher in media. So this would be a large name for media.
What's Paramount's? Does Paramount have a view? Does a marketplace have a view on Paramount? Well,
Paramount, it's not a very large name, and it is on the cusp of IG. It trades very wide for IG, but that's because it's on the cusp, and there's fears of a certain deal like this. Now, there's two sides, right? You have the positive of the Ellison family and Redbird coming in and saying, hey, there's support there. I know we have somebody that's backing us. Things can't get too bad. And the flip side, the business is challenged, and there is the risk of high yield.
I mean, back in my day, for this kind of deal in your high yield market, 5 phone calls, I would get a sense of whether this deal could get done. Is it still like that today?
Yeah, sure, if you call the right people.
That's right. And I knew the people to call, and they would say, I don't think so, Paul. I don't think we can get this,
Well, speaking of the right people, Jared Kushner is part of this Paramount hostile deal bid for Warner Brothers Discovery through Affinity, the firm that he runs. So there's all kinds of political considerations as well. How do you anticipate Warner Brothers Discovery bonds to trade in the meantime? I mean, what does that look like?
Well, they've been very volatile, right? So if we go back a couple of months ago when they got junked and there was the big tender offer, the bonds were crushed. They were trading at large discounts to par. Then they've had a nice run over the last couple of months with all the speculation of being bought out.
Yep.
Now, the Netflix deal happened, and the existing bonds appear to be left behind with the global networks business, which is somewhat deteriorating. So the bonds traded off a little bit on Friday, and then now coming in with having Ellison and Redbird behind you, that's giving a little bit more of a lift. But they're likely to remain very volatile.